Hello and welcome back to another episode of Wealth and Christ Show. I'm your host Dami, and today I want to share some personal lessons I have learned this past year about money, investing, and just living life. I first want to apologize that I haven't been posting as much, but I hope to get back to being consistent and post at least twice a month going forward. But being said, one thing I have realized as we're in the month of December is that your financial journey is more about accumulating wealth, seeing the numbers in your account grow. It's about building habits, gaining perspective, and creating a life that you can enjoy responsibly. Whether you're starting out, you're midway through your career, already investing, some of the lessons I'm going to share can help you make better choices and stay on track. And one of the lessons I learned this past year is the importance of investing consistently. Too often time in different aspects of our life, we find ourselves waiting for the perfect timing. The perfect timing to ask a girl out, the perfect timing to take a test, the perfect timing to book that trip. But when it comes to investing, that's gonna be one of the biggest mistakes is waiting for the perfect timing. Too often of people wait for the market to drop or for a stock to hit a specific number. And the funny thing, when the stock hits a specific number or the market actually drops, you will find that a lot of the time these people still don't buy because they believe that they can drop lower, it can go down lower. But the reality is that the market moves unpredictable and waiting for a perfect moment often means missing out on real growth. Investing consistently, having a recurring amount that's being put into a specific stock that you believe into, a specific ETF that you believe into, is a better way to position yourself to avoid missing out on opportunity. As we've seen this past year, the market did move massively on certain days or even certain months, upwards and downwards. And specifically when it comes to upward, if you were not in position, you miss out on those moves. Dollar cost averaging is a great strategy that helps you buy over time and reduce your risk and grow your wealth steadily. For me, for example, I made a habit to set an amount that goes into my account into the various stocks, ETFs that I'm invested in, and individual stocks that I'm invested in. That way I don't miss any type of growth. A perfect example is Google. Google, I believe, I think if it's not Google right now, if I'm not mistaken, is close to being at all-time highs, and I happen to be in position. But if I was waiting for Google to fall to a certain price, for Google to drop or everything, then I will have missed out on the growth that happened. Google literally went up 6% in one day. And before I go further, and I will admit, some months this year it felt like a loss, investing and reoccurring. But when the market recalibrate, and it goes on an upward trend, my investment allowed me to benefit without trying to time the market for perfect entries. Google was a stock that was not doing so well earlier this year. But after the latest earnings, it has skyrocketed. Investors love what they heard from Google's CEOs and representatives. A scripture that comes to mind is Proverbs 21:5, which states, "The plan of the diligent leads surely to abundance, but everyone who is hasty comes only to poverty." The key takeaway is be patient, consistent, and disciplined. Trust that the small, regular investment compounds over time into significant growth. $100 you invest in it over time will turn to two, to turn to four, will turn to 1,000. And one day, if you continue to invest, will eventually turn to $10,000. And with compound, it will grow more than that $10,000. But it's always, I believe one of the best things I've learned was to constantly dollar cost average into stocks, ETF that I strongly believe in, and it did pay off. Another lesson I learned this past year is buying value and not the hype. It's very easy to get caught up in different stocks that are skyrocketing on a weekly, everyday basis. But it's important to buy stocks that you believe into, that you see the long-term value. Not every opportunity is a sure win. Chasing hype or trends can be costly. Instead, focus on an investment that has strong fundamentals, proven growth potential, and alignment with your goal. So for me, going back to the Google example, I watch YouTube a lot. I don't see YouTube going away anytime soon. So it was a reason why I was buying Google. It was a reason why I was investing in Google. And this is not financial advice for you to go and buy Google, but it was just my personal experience of investing with Google. If you believe in the long-term growth of a company or asset, you don't need to wait for the perfect price to start. You don't, because there's no guarantee that the stock will ever hit your target. If you fully believe that the stock will continue to grow, today's the best price to buy it. Yes, the stocks, a lot of stocks, every stock goes to a pullback, but the pullback that you may be expecting, it may go up 20% before it pulls back 5%. So it will still be cheaper to buy it now before it goes up 20% to come down 5%. Or before, like for example, like Nvidia, which went up over 40-60% before it comes down a little bit. So me personally this year, I invested into long-term growth. I invested into stocks and ETF that I believe has long-term growth potential. The lesson here is to think long-term and not to focus so much on a short-term fluctuation that paralyzes you from investing in value you understand and believe in. I have missed out on opportunities because I was waiting for a stock to come down to a certain price, and during that period, I was watching the stock. It never came down. It actually skyrocketed over 40-50% from the actual price that it was currently at when I was tracking it. Number 3 is, if you guys have been following me on social media, I've been doing a lot of traveling, specifically this year, and I thank God for the opportunity to travel, for taking me and bringing me back safely. But one lesson that I've learned, and I'm understanding that a lot of people are sacrificing living, enjoying life because they want to achieve financial freedom. And it's important to understand that financial discipline does not mean giving up on life experience. Many people think to grow wealth, you have to cut off travels, hobbies, social life, but that's not true. Traveling, having a hobby, having a social life is what makes investing even more enjoyable. Because investing in general is really boring, can be very boring. But this year I made the conscious effort to travel, to explore different places, spend quality with loved ones, all while investing and saving responsibly. You don't need much to travel, especially here if you're in a European country, if you're in a first world country, saving €300, saving $300, or equivalent of that much, over 6 months, that can buy you a trip, that can buy you a plane ticket in as well. So it's important to understand that you don't have to wait, because I always said there's no guarantee that we'll all live to reach financial freedom. I pray that we all live to reach financial freedom, and all that work that we put in is not going to waste. But being that said, we need to enjoy this journey. Take yourself out on a date. Take your family out on a date. It doesn't have to be every week, every day, but once a month won't hurt you. Especially if it's something that you can truly afford. I'm not saying go on a shopping spree or go book first class tickets everywhere in the world or buy the most expensive bag, most expensive jacket, $10,000. No, I'm not asking you to do that. But it's important to find things that bring you joy while you're in this journey. It's okay to spend money on the things that bring you joy while you're on this journey of building financial freedom for yourself. Remember, it's all about the experience and memory you create. You're only gonna be as young as you are now today. We only get older. I will say this: financial freedom should support your lifestyle, not limit it. Plan, invest, and budget wisely, but don't delay living while you're waiting to arrive financially. And the next lesson I learned, which might be the most important lesson I learned this year, is that everyone's financial journey is going to be different. No two person's financial journey are the same. Like, it's very important to understand. So it's like you can't really compare your journey. You can't really hold too fast to advice people are giving you, about how to go about building wealth. Because it may not be applicable to your situation. Like, we all start from different places, we face unique challenges, and have varied opportunities that position us to bring us closer to achieving our financial wealth, financial freedom. Comparing yourself is dangerous, and someone may seem growing faster, but invest differently or make decisions that works for them. But that doesn't mean you should follow the same path. Because the way they're investing, the risk that they're taking, may not be a risk that you're comfortable taking. And a scripture that comes to mind, Galatians 6:4, and it say, each should test their own action, then they take pride in themselves alone without comparing themselves to someone else. Focus on your goal, your resource, and your progress. Celebrate your win, however small or large or big, and stay committed to your unique path. So don't get discouraged, don't get distracted, because you see someone, it seems like someone's ahead of you. We're all starting from different positions. We're all starting from different places. Some of us are starting with zero, some of us are starting with a few thousands, few hundreds. But we all have one goal. But we're all going to get there a little bit different. But some of us may be shorter, some of us may be longer. We're all facing different situations. Life throws different curveballs at all of us. And it's all about adjusting and adapting, but staying focused and being appreciative of the wins that you have. Now, the last and final lessons I have learned and I will share is having patience and being mindful of your perspective is crucial. Wealth is not built overnight. It actually takes time. Investment goes up and down. One moment you can feel like you're so close to achieving financial freedom. Next moment you can feel like you're so far because of how your investment goes. Something didn't work out. But it doesn't matter. All that does not matter. If you remember that building wealth takes time. Every action you're taking is only bringing you a step closer to achieving this dream and achieving this vision of you becoming financially free. So don't get discouraged when you can only save this month, or you can only invest this month. The little things that you're doing, the little actions you're doing, the little investing that you're doing, the little saving that you're doing, it all adds up over time. It compounds over time. It prepares you for opportunities that you can't see. And the verse that we'll end up with is Ecclesiastes 7:8, where it reminds us the end of a matter is better than its beginning. Patience is better than pride. And this year I learned staying the course, even when results aren't immediate, is more valuable than chasing instant success. So I hope you guys take these 5 lessons of investing consistently. Don't wait for a perfect moment. Buy value stocks. Buy valuable assets. Live your life fully while investing. Accept that your financial journey is unique. And last but not least, be patient and trust the process. Actually, I'll rephrase that. Be patient and trust God's process for your life. As always, I hope this bless you guys. I hope this encourage you guys. And I look forward to seeing you guys next week. Peace out. Stay blessed. See you.